not just some South Africans.
Widows of government employees have approached Parliament and the South African Revenue Service. They say they're being driven to poverty because of tax laws. It's because many still work and get pushed into higher tax brackets when they start receiving the pension of their spouses. Well, is this all above board? We're joined by SAICA's Project Director for Tax, Piet Nel. Thank you so much for your time tonight, Piet.
Pleasure.
The plight of many of the widows that we heard on News Prime yesterday is really incredible, because many are saying that they get taxed for work, they get taxed on the pension, and at the end of the year, SARS still expects them to pay more tax simply because accumulative figures between the two earnings pushes them into a higher tax bracket.
Yeah, that's exactly right. Our tax system is such, it's a progressive tax system. So, and the intention is to tax the rich more than the poor. But the moment you get more than one source of income, of course, put together, because you've got to aggregate all that income together, and that pushes you in the higher bracket. So definitely true in that sense. And what happens, because it's all pension related, initially when the minister announces, they were looking at expanding it to also where you get more than one source of income from an employer or different employers. Now it's specifically limited to people where one of the spouses had died, and you now afterwards become entitled, so the surviving spouse is entitled to a pension from that. So you may be receiving income from your employer, and you're receiving the pension, which is treated as a salary for tax purposes, is subject to tax, but at a lower rate. Because of the progressive rates, they deduct tax at a lower rate. The moment it's assessed, it's added together, and then you get the additional tax.
But of course, the issue that many of them are raising is that at the end of the day, they end up going home with much less money than they would have initially. And this is money that they simply don't have, because the amounts of money we're talking about don't necessarily run into the millions here.
No, yeah, I think you're right that it's mainly the people in the lower income brackets that will be adversely caught by this proposed change. So that's definitely. So if you take the couple before, let's say, the death of one of the spouses, they would definitely have more tax or more after-tax money available than the moment that you put it together. I've done some numbers, if I can maybe run that through you.
Sure.
If you take, let's say, one person, the one spouse earns 90,000 Rand, and you take the other spouse earns 100,000, let's take it that they're both on pension, so just to make it easy. And let's say they're over the age of 65, then they will pay no tax at all. If one of them falls away, the tax burden will now go up to 18,000 Rand on, let's say, the one with 100,000 pension falls away. You've got a combined income of 190. Your tax account increases by 18,000 Rand. On final assessment, you'll have roughly a 15,000 assessment, so you'll get some money back. But this is what they're trying to do, and there were people that were actually lobbying to get a change so that they have this upfront tax deduction and not wait for it, because you don't save for that.
Sure. You know, even with some of the amounts that you're talking about, they certainly wouldn't necessarily be among the income brackets of the kind of individuals that we're talking about here, because one of the issues that was raised was that, again, because this leaves them in a different tax bracket, they now find themselves just on the cusp of their children not being able to qualify for things like NSFAS and accessing higher education, because the system says they should be able to afford it, but the reality is that they can't.
Because of the tax.
Yeah.
Absolutely right.
So then a call that says that this part of the legislation should be reviewed. Do you think that's something that's likely to happen? They've approached Parliament and Treasury, but what would some of the considerations, especially around the law, have to be? Yeah.
So what the reality is that the Minister Mboweni last night tabled the bills. And they've got a proposed amendment to paragraph 2 to the employees' tax laws that say you have an election, so you as that surviving spouse can go to the fund and say, please deduct more tax. That has always been in the law, but now they specifically provided for this in the sense of with pension funds. So you will go to the fund and ask for them to deduct more tax so that it relieves the burden, but it reduces your monthly tax. And the way it's written, the tax deducted are more than what you will finally have to pay in. So the lobbying, it will be a fundamental change in the law to lobby to have the second pension not taxed. Because, I mean, if I work and I earn additional income in the evening, I must add that together and be taxed on that.
And to the extent that they don't want the pension to count as a salary, because that's one of the other problems that they've raised, is that the fact that it's considered a salary, of course, then puts it in a whole other bracket, whereas if it was considered as maintenance, as it were, from the courts, that would be different.
That would be different, but you see, if we just think of the tax regime regarding our retirement investment and the money there. So when we work, you start contributing to the pension fund, government employees included. They contribute to the fund and they get a tax deduction. So they reduce their taxable income with making that contribution. That grows tax-free in the fund. Now, after you retire, you then take your pensions. You replace your salary with the pension. That's the whole scheme of things. So one can't really change the nature of that to be something like maintenance, which may not be taxed. So it's income by its very nature, and you had a beneficial way, and it makes sense for government to do that, to say, look, we incentivize you to save for your old age, then we don't have to look after you when you retire and haven't got any pension.
Except when you do retire, we'll still try and get as much money out of you as possible.
We'll say, we'll make you pay for the benefit, unfortunately. Yes.
But what then are the options that are available to people in this position? Because many of these widows find themselves owing SARS up to 50,000 rand, 60,000 rand, cumulatively over a number of years. That is quite incredible. They've received summons to go to court. But many are saying they simply don't have the money, because some are working as teachers, as domestic workers.
I think, and I haven't, we've heard in Parliament, there were some of the widows that came in after the budget earlier this year. But if you just think at the reality, you've got two spouses married, and they're earning sort of enough to get by. The money is just enough to get by. Now suddenly the one falls away, and the pension may be lower than what it was before. Now you're still using all that money up. Your household expenses probably comes down a little bit, but not enough. And we've had increases in living costs. So now you come to the end of the year, you submit your tax return. If you don't, SARS will penalize you. And I think a lot of people are being penalized. They thought, I don't have to submit a return, and then they get penalized as well, which brings in additional cost. But now you're assessed, and suddenly there's this huge tax bill, which makes that. So here I say, in this instance, where there were no tax before death, the year after that, we're looking at 18,000 or 15,000 worth of tax. So 2-3 years, you get to the 50,000 rand. And that's the problem. So the only way is to be financially astute to put money away under the current system. If that's the case, you've got to either ask the fund to take off tax from this one that previously wasn't, sort of to say, but this is, if you take that off, then I don't have to pay in. But that takes advanced planning, which is something that you would not think of after death.
What would their options be if they were to take this matter to court?
You see, when we go to court disputing tax law, the courts will just look at the letter of the law, and they say the letter of the law is the suspension, it's gross income subject to tax. So you have to lobby for government to change that and to say, when we have, maybe we had that many years ago where we had rebates when you had children, and when you were married and you had a rebate that reduces your tax. So this would be a way to lobby and say, when I'm a widower and I'm in receipt of two, let's just, we can't change the tax rate because that applies to everybody. Give another rebate or exempt a part of that. That would be a way to reduce that taxes.
Sure.
Yeah, whether government would be, but I mean that is worth lobbying for. But
so in terms of process, it would include amendments to the current law as it is.
Exactly right. It would, and when we do that now. Normally in October, November of the year, we make proposals. When the budget is done, we make tips to the minister to change the law. They can make tips to that. They can lobby as they've done, and ask for the law to be amended. But that would involve, as I say, changing the nature of that pension into something that is tax beneficially taxed then. Yeah.
Well, certainly has been a fascinating topic to get into, and the reality is that many of the widows are struggling, and they simply have no way out of the financial.
That's why I say your expenses probably don't change that much after the one spouse falls away, and now suddenly it increases because of the tax. So that would be why they're struggling.
All right, well, that's a story then that we'll keep watching for. You will find out exactly how the lobbying of the National Treasury, as we were told yesterday, will take place, and if they get any positive responses this time around through their engagements. Mark Lewis is standing by. He has your sport after this. Do stay with us.